Good morning. Three topics today. First one will be on the Bitcoin, then we'll discuss the outlook on the US dollar, and we'll end with stock market indices, and especially Euro Stoxx 50 and S&P 500. First chart, Bitcoin. This week was a major, we saw a major breakdown below a key technical support at 6,000 on the Bitcoin, which was a critical support since a long time, because I mentioned this key support during the summer. So a few months ago, what we have seen since then is a volatility contraction. So the Bitcoin was very steady, but unable to start a technical bounce. And what happened this week, at the middle of this week, is a massive breakdown below 6,000, which probably resumed the long-term downtrend and suggests that the deflation of the bubble we saw last year is not over. So very significant downside risk right now. On cryptocurrencies, with a decline possibly as low as 3,000, which is the next long-term support level. So be very careful on cryptocurrencies right now, and especially on the Bitcoin, with the 6,000 becoming a key technical resistance. If we now make a focus on the dollar index, so the dollar index also hit a quite important technical level this week. This level is a 61.8% retracement of the entire decline since last year. So a key technical resistance at 98 on DXY. So this level was almost hit this week, and we saw profit taking close to this level, and followed by a pullback over the last few days. If I also look at the 14-week RSI, as you can see, starting to build a bearish divergence with prices. So the key message is that, okay, the US dollar hit new highs this week, but be aware of a false upside breakout above the previous highs, followed by the start of a pullback. So I think it's a real risk for the next few weeks and possibly even for the next few months. If we now switch to the euro dollar, I mentioned the possibility of a false breakdown below 113 last week, and this scenario is becoming reality. The next Fibonacci support, which is quite the reverse of what we saw on the dollar index, held. So 111.90 was a key support, successfully tested this week, and over the last couple of days we saw a pullback above 113, suggesting, confirming, I would say, the false breakdown scenario and possibly the start of a technical bounce. 115 is the first important support, so watch out for a technical bounce to 115 and possibly even higher. If I complete the dollar outlook with Japanese yen, so dollar yen almost hit an important, a major resistance that I discussed numerous times since last year at 114.30, around this level. So once again, this resistance zone was hit this week, and once again it provided resistance. So I think what is becoming likely is the start of a setback, at least to 113 and possibly lower. The worst case scenario would be a pullback to 111, 110. Then after that, longer term, I'm still keen to call for a new rally and possibly this time an upside breakout. But my feeling is that it could be next year. We'll end this presentation with an outlook, so an update on the technical scenario on the Euro Stoxx 50. So what we can see on this index is that the technical outlook remains very weak. Okay, we saw a technical bounce in late October, early November, but nothing very convincing at this stage. The only good news being the stop of the underperformance of European indices against the US. So that's a quite interesting event. So Europe has stopped underperform the US since September. So that's quite a long period. But unfortunately, we haven't seen a real upside breakout. So start of a consolidation pattern forming on Europe versus US, but no significant trend reversal. So, but that's already quite interesting. In the short term, I mean, the outlook is still not really rosy on this index. Risk would be to retest 3,100, but my feeling is that the index will probably not go much lower than this level. And any break below it could provide contrarian buy opportunities. And also because we will be very soon in December, and that December is usually not a very good month to short the market. One comment about a market timing signal. So it's DeMark setup 9 sell on the Euro Stoxx 50. So as you can see here, a very nice setup 9 sell signal followed the next day, so very quickly, by a bearish reaction. What this chart is telling me is that investors are quite confident now to sell indices on strength. So as soon as we start to see overbought conditions on short time frame, this is a daily chart. So as soon as we start seeing oversold condition, they are selling the market. So this is a typical behavior of a bear market. What could happen within coming days, I mean, especially if we have a setup 9 buy, so which means that the index goes a bit lower. As I told you, potential trading buy opportunity, but that's just for trading. We'll end with this chart of the S&P, just an update of what I told you last week. So last week I told you that this index could not be able to break above an important resistance at 28.15. So that's what it did. Start of a pullback. I would expect the index to keep trading sideways in the near term. Longer term, I think we could have another breakdown, but probably not this year, probably in January. Thank you very much.